I wanted to switch gears and look at the IMF program. We are well aware that Kenya has two facilities with the IMF, and with these two facilities, the program will be coming to an end in April of next year, 2025. One of the biggest ask that a lot of us have been having is, why is the government and IMF always looking as if they want to rob Kenyans' pockets? And in order to address this, Kenyans have argued, and among other African citizens, that IMF need to leave not only Kenya but the rest of the continent. So I want to start with that aspect, Nderi, and ask you: do we need to kick out IMF, even though we are having an end of a program, hopefully next year?
I don't think that program will end. Not. They'll extend it, and you'll see. IMF isn't necessarily the problem. They're not the primary problem. Of course, they're offering bad advice because and they've got the influence to do this, to offer advice because they have money that we need. The real problem is obviously because we are living beyond our means, and largely you can trace that to bad investments through state-owned enterprises, which may include also NHIF and now Shisha, like I like to call it. So if as long as we are running huge deficits, and at this point I don't really care about primary versus secondary deficits. As long as you're running a deficit, your debt is growing. So we need to run surpluses by government. There's a reason why the likes of Germany, Brazil, Italy, Switzerland have balanced budget amendments, or their relatives in their constitutions, the various constitutions, or in their laws, is because you can't trust a politician. Politicians are very short-term thinkers. I mean, the guy, he figures that once it's done, right? So he wants to do what he intends to do at the point. And the problem is, some of these guys are driven by uh, private motivations. So you if you give him too much power, um, they can mess you up. So that's why these guys have this balanced budget amendments. We tried our weak version, where we were saying in the PFM Act that borrow to you can't borrow to spend on recurrent expenditure. But the thing is, even if you spent on capex for a project, and the economy doesn't rise sufficiently to be able to cover um, the spending, then at some point or the other you'll find yourself borrowing to fund the debt. I think that's what you're seeing with SGR, and I think the LAPSET projects, where we've invested lots and lots of resources, but there's no economic activity to pay for, to sufficient enough to pay for these things, and therefore now the government now is coming with additional taxes to supplement uh, revenue. I mean, to generate more revenue to pay for these boondoggles. So the appropriate advice from me would have been from IMF that we figure out a way to cut spending, right, and aggressively so. If we need to go like the Argentina way, we do it, but we needed to cut spending, and let the economy thrive. But we're going the other direction, where we are looking to increase our spending, and I think this is just to support short-term funding from IMF. But we need they're asking for higher tax rates and more taxes from areas where they think this can be done. Obviously, they feel no pain. The IMF employees are not even taxpayers anywhere in the world, so they don't feel I don't think they understand the weight of their prescriptions. But that's what they're doing. They're proposing for they're predicating their additional lending to additional tax rates, to additional taxes and higher tax rates, and I think it's just generally a bad idea.
So, Derry, if I ask you,
And that points
and probably,
and that points to a weakness in the economic models.
all right, actually, you just answered the very last piece of that, because I wanted to ask, looking at this program, I think that should have been since 2021, when Kenya decided they want to go back to IMF. And of course, there's historical perspective on the existence of this organization. The other day, I saw a documentary they're shooting saying it's 80 years of existence, and they have helped countries when they needed this help. Would you objectively look at this and say that to some extent they have been able to achieve and give us the reprieve that we require as a country? I know you've talked about the taxes, and that looks to be one of their models of trying to give reprieve. But from the model of this program, if you may, has it really been able to save Kenya from her turmoil?
That's a problem. You see, they've adopted a very, shall I say, Keynesian uh, way of thinking. When Keynes was told that his economic thought ignores long run economic health, he said, in the long run we're all dead. It's the same thing. These guys just want, okay, um, what do you need now? You need $10 million. That's fine. Where are you gonna raise the additional $10 million from? If you give us a proposal on where we're gonna raise the additional $10 million from to pay us, then we'll advance the money to you, and that's how they operate. Which uh, makes it a weakness. IMF is a child of the Bretton Woods conference. It was essentially supposed to be one of the stabilizing institutions for countries to meet their obligations. They're supposed to assist countries meet their obligations. When we moved to a dollar-based global trading regime, I don't think the primary concern is to save the country. It is just to figure out how to pay, support countries to meet their short-term objectives. Whether they negatively impact your long-run economic prospects, I don't think they really care.
I hear you, Nderi, and unfortunately or sadly, I share in the same sentiments. I would love to ask you or get your sentiment on this. I have struggled, by the way, historically to understand why the IMF basically or largely relies on tax-based austerity measures when we have seen historical examples and real-time data that tax-based austerity measures tend to fail more than expenditure-based austerity measures. So what is your view on that, or what's your take on that? Do you share in the same sentiment or you have a different view?
No, no, actually, I agree. You see, and this has also been tested in places like the U.S., where two adjacent states have fiscal problems, and one decides to cut spending, and the other decides to raise tax revenues. To raise tax rates, and it always works out to be that the one that raises tax rates might even actually collect more in terms of revenues, but because the seeming solution would suggest to the politicians that there are actually more resources available, so they actually even double the spending. So the problem actually becomes worse. It's an incentive question. But I don't think the IMF really care too much for that. They come across as economic analysts, but I think that's as propaganda. And the other, the, I think they use data just to support their 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 talking points, not to they don't look for real solutions for countries. And for me, actually, and one thing I always keep pointing out to guys that remember that IMF is also a foreign policy tool for the United States of America and our Western allies. So if they think that economic policy, if they have higher objectives than economic policy, I think they will use the fund to pursue those in complete disregard to economic theory.
We are hanging out with Johnson Derry. Derry, you know, when I was having challenges, I thought about cutting on the staff and retrenching some of them, giving them a golden handshake. But I guess we have to go and renegotiate the terms. But anyway, on a serious note, though, we are still looking at the IMF program, and as we talk about the flaws that are happening, I'm inclined to ask, you look at the IMF reliance on that is tax heavy austerity measures, because looks like we always go for taxing and more taxing. But in your view, how about expenditure focused austerity? Will they yield more favorable outcomes for the economy in your view, Derek?
Most certainly, and the reason being, when you're cutting spending, you're actually dealing with the problem because that's where the problem came from. We had this idea that if government spends more, then essentially it will be putting in money in the economy and the money will circulate and da da da. Uh, Essentially, what Keynes would call, the entire thinking being based on the circular income theory. So yes, that's where you hear people talking about there's no money circulating in the economy, and therefore the solution then is government through spending and through inflationism to inject additional resources in the create new money and spend it and that will circulate. But that's not how it works. Largely because everybody has their own income statement. So everybody who is engaged in production has an income statement to look after. And when you increase money supply, what you're doing is you're taking away his purchasing power, which will reflect in forms of higher prices. So for some people, these higher prices will actually work, but for a good number and the more crucial ones like the manufacturing sector, which have what we call longer, production cycles, this will actually hurt them. They will not be able to move their products. They will be less competitive, and generally the economy will be less competitive because of higher prices. With and For government to pay for all the deficit spending, it will have to raise taxes at some point. So you lose on two fronts, both on purchasing power and you lose on competitiveness. So that makes a lot of economic activities unviable, and that's why um, uh, when people start exiting production, you start to see a slowdown. JB Say said, it's called JB Say. He said that demand is dependent on production. What he actually meant is by people producing, for example, by the baker producing, that's how he's able to pay for the meat that he wants to buy from the butcher, and the butcher getting involved in production of meat is able to pay for um, somebody else's production. So when people start dropping off of production because their activities are unviable, that's when you start seeing a general slowdown and your demand is collapsing. And then suddenly you can't sell stuff. In the ultimate analysis, revenue based austerity measures impact the economy, they impact it negatively.
But Nderi, whereas I agree with you in terms of the spending approach. Why I mentioned the issue of the golden handshake, maybe my understanding is quite different. But you remember back in the 90s or early 90s, thereabout, late 90s, I should say, there was a lot of
Yes,
layoffs, and government had to
right,
do this in order to address its expenditures. But that also came with a
right.
heavy blow on the labor market. So what are the possible chances that if Kenya was to do that today, will not have more suffering,
Yeah,
rather the pain will be short-lived? Because people are afraid today, even getting employed or getting a secure job opportunity, it's almost a dream. So if we were to go on spending, I think the first thing the people that will suffer include the civil service. So what is your opinion on that if that was to be taken up?
so let's go back to the 80s and early 90s, right? Back then, that's when we used to wait for, what do you call it? When the budget was being read, that's how you knew what the prices will be for the next 12 months. To apply to open a company back then, you needed special branch clearance. If you had a good idea, the politicians of the day then would demand that you put them in the shareholding, and of course that bleed you dry. So it was a very different time then. Government cutting jobs didn't necessarily mean an increase in jobs, because the economy was centrally planned, very centrally planned, and that came with all the bells and whistles of our command economy, uh, basically a tyrannical government. Now, maybe the conditions that were there then maybe are prevailing now in some sort of way, because um, um, you know, if the government fired people, doesn't necessarily mean that job creation will start immediately, right? From the savings, from the lower tax rates, but that's why we're looking at the entire thing comprehensively. So we're looking at two things. We're looking at let me say three things. We're looking at tax rates, we're looking at inflation rates, and we're looking at ease of doing business. If all those three are well addressed, then you'll have a very favorable environment to do business, and government retrenchments and cuts to government spending will actually translate to lower tax rates, and which is one of the components to have a fair, to have a favorable business environment. Remember, not all jobs are created equal. For every additional one government, that means, every additional one government job, that means somebody else in the private sector must pay more to support this guy's spending. So the reason why we covet private sector employment and production is because that's where you can assess real value, right? If you're not producing something valuable to society, you'll quickly run out of business. But the problem with government spending is when even when they're not producing anything of value, they just raise taxes, right? So you have that mismatch, because somebody somewhere is producing but not creating value, or even not producing at all. Just ghost workers and whatnot, and that's just creating a burden on actual producers in the economy, and which is one anomaly in the national income, what we call the national income theory. The problem with government spending is that it's assumed to carry value, whereas private sector, the market takes care of whether you're producing value or not. So yeah, I hear your concern, but I'll tell you this: if we went into what we call structural adjustment programs, like what we had in the 70s, 80s, and 90s, why this one will likely be more successful is because we have a better and business environment than we had in the 90s, and therefore cutting tax rates today will actually likely translate into more jobs because the structural barriers to job creation are no longer there. So now it's just a question of competitiveness.